Crypto Billionaires 69 back with an important update on the overall markets and Dogelon Mars. In this video, we are going to go over the overall market, as in Bitcoin, the Fear and Greed Index, what this means, and then we're going to go into Dogelon Mars and get straight into the technical analysis deep dive. So, this time we're using the candlestick charts, not the simple line charts. And we're going to go ahead and I'll give a prediction as to where I think it can go and a time frame as to what that's going to happen. But first, we need to understand the overall markets and what's going on in the economy and everything. So as we know, elections coming up, we have hurricanes going on, although that's not really affecting the market. It might be a little bit. We have wars going on, so there's a lot of uncertainty and fear coming into the markets right now, which is why we're dipping. It could be one reason why we're dipping, and why even though the interest rates are cut, we haven't seen a spike, a huge spike. We did see a nice little spike up to these $65,000 levels. However, we saw a retracement back down to these $60,000 levels, and in the last video I said we're most likely going to break through these $60,000 levels and come all the way down to these $58,000 levels. So we're going to keep our eyes out for these $58,000 levels in the next few days. We want to see it hit these $58,000 levels and do something like this. Boom, bounce off of it with extreme volume and breaking these previous resistances, okay? That's what we're looking for. We're looking for a move down to these 58s and then a spike back through these 60s, back up into these 62s, potentially by October 15th, okay? So we're going to keep our eyes out for that and see what happens. So, yeah, Bitcoin is down. It broke through these 60K levels, and the Fear and Greed Index is at 37. If it does break down to those $58,000 levels, we should see this drop a few more points. And at that point, we're waiting for a good sign of support. So, Dogelon Mars, on the other hand, these are the daily candles, right? So each candle is a day. And if we go back in time to when Bitcoin had its rally here in 21, we can see there are certain days where it moved. Let's just go ahead and do this. In one day, it moved 100%, over 100%. It moved 130%. In 2 days, it moved over 230%, okay? So these are moves that are normal with Dogelon Mars. Because it's a small cap, it can move a lot quicker with a lot less money flowing in. So getting in at the right time is a very important key thing to do. So this day it moved 100%. You see the difference? This was 100% and this was 100%. The candlesticks are much different. It needs a lot more money to move 100% when it's higher than it does when it's lower, because the market cap is different. If it's $1 million market cap, we need $1 million more to flow into this coin in order to move it 100%. If it's a $10 million market cap, we need $10 million for it to move 100%. And currently, Dogelon Mars is at a $67 million market cap. So we need $67 million to move in to get 100%. Now, we've seen this in the past. These are daily candles again. So let's go ahead and look at this spike here. All right, this was one day, and we saw a move of 100% in a day, about 96%, okay? If you're getting out at the top, and you can get out at the top. It's just about knowing what to look for. It's quite simple, actually, but it does require time and energy. Although, if you know what you're looking for, you can literally do this. You can get in and then set your take profit limit and then not even look at it. And that's another way to trade. But it all goes into the same strategies as to figuring out where the best point of resistance is, the most point of resistance to where you're going to have the most selling pressure based on historical events, predicting that with a high accuracy, and then not being greedy and getting out when it hits those levels. That's how you can consistently profit in these markets. So let's get into these charts right now. We're coming up at not all-time lows, but all-time lows in the past previous years. The all-time lows would be around these 489 levels, okay? Which is a long way to go from here. That's tens of millions of dollars. Let's see specifically how much money that would be. So that would be 60% of $67 million. So what, like 25, we'd have a $25-30 million market cap left. Maybe even like $22 million market cap. So that's like $40 million need to leave this coin in order for it to retrace back down to these all-time lows. So definitely keep that in mind. But looking at the previous historical charts, we've seen a lot of spikes come in, and we've seen a lot of money been made. At the same time, we've seen a lot of money been taken. This is a 74% in one day, right here. This candle there, right? So it is quite simple to make 50+% trading crypto. It's just about patience and setting the right take profit levels. If you want an extreme deep dive into what exactly to look for, check out the first link in the description. So let's get into the 4-hourly candles. So first of all, I'm going to draw a few lines here of support that are very, very key to watch and hold. We are at a critical moment in Dogelon Mars. So we need to keep our eyes peeled for some support. We want to see some support stepping in around here. Okay? This is a good time to consider either averaging in or getting in. And the reason I say that is because we're approaching these super support levels at these 1184 levels. If you look in the past, we've seen it come and hit these levels multiple times and bounce. Here it went all the way through them, broke it, took out all the stops, and then retraced back up all in one day, and then spiked 100% the next day. Isn't that crazy? Isn't that crazy? Oh, that was only a 30% spike. Okay. Still, 30% in a day is pretty good. So let's say you see these levels. Although it's hard, this was the first time it ever came down this low. So the only previous levels of support that you have are over here, and that is around this area. And that's exactly where it came up and bounced off of. That is not a horizontal line right here. So, and the reason I say that is because look, if you zoom in and you see over here, you can see a spike and it hits these levels of resistances, right? And when it breaks through that, these old levels of resistances turn into level of support. That's what it did. It broke through, came down, tested that, turned into support, and it broke through. So that was the only major level of support that you have when it has that massive spike to the downside right here. And that's exactly what we came down to. So where's that horizontal line? It's not coming up here. Let's go ahead and delete that. Make it real simple for you guys. And look, that is a look right here. See? So it's very important. All of this is just patterns and human psychology. So once you can understand and identify the patterns, and also understand and identify the human psychology behind this, you can start predicting the market in very, very functional ways, which can lead to making a lot of money. But the money is just a byproduct of having a good mindset and having a good trading strategy. Being able to pick the right levels over and over and over, and continue to make the correct trades as time progresses. So, technical analysis on Dogelon Mars, like I said, we need to watch these 1184 levels very closely. We have hit it already, not including these 3 times back here. We've hit it 3 more times here. So, it's looking a little bit concerning simply because we haven't spiked with real volume yet. Like we saw a little spike here. That was a nice 30% move, right? You saw a little spike here. It's probably around 28, 26%. But it's coming down and it's just hovering again, just like it was back here. So, like I said, getting in. Personally, I would be averaging in right here. I wouldn't be averaging in everything, but I would be averaging in. And the only reason I wouldn't be averaging in everything right now is because it's not lower. It's not at these support levels. I'd put in buy orders at these support levels because, as you can see, this is a major level of support. Boom, boom, boom. And you can just scalp the crap out of it in about a week. The probability of it, as you can see in the past, spiking up at least 25% is quite high. So I would be putting in buy orders here and just simply waiting a week and seeing a spike to the upside. Now, of course, those buy orders get canceled if it breaks through these levels of support. Through these 1115 levels, then you this is where your stops would be at this moment in time. But you got to realize that is also a level that the market makers want to push it down to, because this is where a lot of stops would be, right? So it's a very critical time. And if you think about it, because of all the previous price action we have with this support level, it's almost getting time to break through it, to hit those stops and create a new level of support, maybe even lower. So we can spike even more in the future with less money coming in. So it's very important to watch these support levels. But if you known about this strategy before, I mean, how many times would you have played this out, and how much money would you have made if you knew this? If you knew what support level to watch at these 1184 levels, like came down to the 1184 levels around here. Let's say you got in, you waited, it came down again, but it didn't break through. You waited, and then it spiked up. That right there is 100%. So I would assume you would take profit. I would take profit right here. Be like 100%. Heck yeah, sure. There's my money. Comes back down. Use the fib tool. Swing low to swing high. As you can see, it's not a healthy retracement. So if you can't see why it's not a healthy retracement, press the first link in the description. But to sum it up for you, it goes down too far. And it's making a double top here. But you wouldn't be able to tell that here. You just see this coming down and then spiking up. That could look like a good, nice move in the short term. But that level of resistance at these 2449 levels are very, very important. And it didn't bust through those. Okay, so that's the most important sign to get the heck out, is when it doesn't bust through these levels. Because if this was a bullish wedge, it would bust through these levels with extreme amounts of confidence. Kind of like this here, right? This was a previous support level. Came through, busted through it with extreme confidence. Then it came down to test it and then continued to move higher. But let's just say you got in at these support levels. And you were extremely patient. Because you can trade however you want. Personally, I would take profits along the way and then continue to get in at a lower level and wait for the spikes. Because you can just churn your money over and over and over, and the compound interest will grow your account better than if you were to just sit and wait for a move that is 246%, right? Let's say you got in and got out at this level, and it's very possible because you can use previous historical data to judge the best times to get out. Now, you might not get out exactly at the top, but you could get out at these top resistance levels and make, 215% or so. It's hard to time the exact top, but it is not hard to figure out where the top, a range of where the top is going to be. It's actually quite simple. So, like I said, you'd make 215% doing that. But imagine you did this instead. You got in at these support levels. You got out. This was 100%. You made a 90% gain on this. Okay, you walk away happy. Then you wait. You wait a few days. You see it comes back down and these fib levels hits a 0.5 and bounces. You're like, wait a second, this is weird, because there's no volume either. And then it bounces, and you see it completely reject these previous, making a double top. That means what comes after a double top? It's going to be a swing low. So what do? You wait for the low. You see where it starts to hit support. You buy again. And once you get in, you wait. So on top of your 100%, the next level of resistance would be the double top again, of course. So you would wait until it continues to go up to these double top and show weakness. You would get out right around the lower end of this red candle right here. Let me zoom in so you guys can really understand what I'm saying, because this is extremely important. You get in and you wait for weakness. Right here, boom. It hit these levels of support. It retraced. Healthy retracement. If it broke back down through them, that would be unhealthy. But it was healthy because this candle here, it came down and then it reclaimed. As you can tell, green candle, green candle, green candle, green candle, and then you simply just wait for a reason to get out. And it comes all the way up to these previous resistances and rejects quite heavily right here. Boom. First red candle, you see weakness, you get the heck out. You get the heck out. That's another 50%. So now in total, you're up around 140%, right? I'm just doing this to prove a point as to how churning your money can be better. But out of that 140%, you're using more capital because you're using that 90% you just made. Therefore, how much was that? Let's see, from swing low to that weakness that we would get out, that'd be 40%. So if you're using 90%, the 90% you just made to make this trade, that's almost double. So you'd pretty much be making 80% on your account right here. Does that make sense? So already we're almost halfway to this 215% mark by churning your money with less risk and less time, if you think about it. Because you're not in the markets in this era. You're not in the markets when it's dropping. You're in the markets when it's already dropped, when it's hit previous support, and you have a clear definition on where you need to keep your levels at, where you need to watch in order for it to be considered a healthy move. And then you get out when it shows weakness. Boom, right? It came up a little higher, and that's okay. Because there's always more opportunities. So what do you do here? As it's stair-stepping lower, as it's just no volume, stair-stepping lower, what do? You just simply wait. You just simply wait. What's the next previous level of support? It's this level here. Well, you got in before, and that's exactly where it came back down. So let's say, assuming that you could see that, you could understand that, you got in at these lows here, right? When it made this candle, boom, it clearly tested and broke through that level of previous support and then reclaimed it. And you get in the next day after it's reclaimed. And well, here on this day, this was a red candle at one point in time. Where is it? Just lost it. This here. This was a red candle. It came back down, broke the low of this green candle, and then broke through, moving higher. That's also extreme level of bullish continuation. So let's say you wait for it to break the low and then you get in after it reclaims that low, right? Now, don't even look to the right here. Let's look to the left. Let's look to the left and see what I'm not looking to the right. No, we're going to look to the left and see what level of resistance has the most level of resistance. So we're going to mark a few lines. As you can see, you have this level. This was previous support. It came off multiple times, including over here. And you're going to love this, guys. You're going to love this. And then this is like a whole in-depth technical analysis. Okay, I'm going to stop talking. It came off multiple times and bounced, right? So this was previous support, which is now resistance because we're lower, right? So I would assume it'd come up to this level. And then the next level you have after that is around, if we're being conservative, around this level. Okay? Very important. This range, very important. And then the next level you have after that, if we continue to zoom, would be this level. Look how many times it hit. 1, 2, 3, 4, 5, 6, 7, 8. It hit 8 times at this level. That's a big level. That's a huge level to break through, because think about it. If you break through all of these in a level where it hit 8 times trying to move higher and break through it before, that means you're onto something. Okay, so I would assume it got close to this top line. Okay, because of those 8 points that it touched. Let's go ahead and look. Well, looky there. What exactly happened? What exactly happened? It came up, and this is how you can trade and make money. Okay, it's very, very simple. You get in at the low. As it comes up, you watch these previous level of support and resistances. If you don't know how to analyze these, this is very simple. Like, this took years for me to learn, but I break it down step by step in the first link in the description. Go check it out. It's definitely worth it, and it's 90% off. I'm going to be stopping that tomorrow. On Friday, sale ends, goes back to 100%. So, like I said, also call me if you have any questions. 850-376-0889. Go ahead and call me. If I don't answer, just leave your name and why you're calling and stuff. I'll get back to you. So, as we can see, we have our levels picked out. We have our huge bullish continuation with volume, extreme volume, and we're in around these previous support levels, right? After we get confirmation that it has confirmed these support levels, we get in, right? So we're here. Okay, that's a little too much. This first line, right? This was the line that is previous support for all these, right? This shouldn't be too hard to break through, but what we're looking for is not just a breakthrough. We're looking for a breakthrough with volume, because if it can break through with volume, then it has more momentum to move higher. What did it do? It broke through with volume. So that's a good sign. This previous resistance is now support. As you can see, it comes back. Let me just stop that. As you can see, it comes back down and tests these support, this previous resistance, which is now support, and then continues to bounce off. So that's a good sign. We look for the volume. It breaks through the volume. Now, the next day, after it breaks through this support, previous support, or the previous resistance, now support, the next day, it comes all the way up and tags our level, our freaking level. It comes out and tags our level that we would make money at, our level where our take profit would be at. Now, personally, I wouldn't be too greedy. I'd take some profit off here at this level, and then I'd maybe sprinkle in some take profits as we reach to the top of this level, because not always does it come up this perfectly and touch those take profit levels. Keep in mind, when I wrote these levels down, I did not see this. Okay, this was all simply based on historical data. So, but as you know, you being greedy can screw you, because if you just 1 cent, it's not even a cent, but you know what I mean, one little tick higher you're selling 100% and it doesn't go that high, you just lost like 20-30% if you're lucky, because if you're in at a moment like this, you just lost like 50%. So definitely hedging and taking profit before, like as you're reaching into the levels that you're going into, is extremely important for long-term success. So let's say we get out at this level. That's another 157% on the 100% that we already made. So keep that in mind. So we already made 100% on our money. We're using 200% of our money to make 157% of our money. What is that? That's over 300% of your money. You just made over 300% by churning your account and using compound interest in your favor. Isn't that freaking awesome? Click that first link in the description. So, like I said, if we were to just buy it at these previous support levels and hold, we would make 220%. If you're extremely lucky and have your supports and your patience down and everything in place, your take profit levels and everything, you would make maybe around 240%. So that's with including room for error, right? But if you churn, keep in mind, in order to make that 240%, you got to go through all this. You got to go up 100% and then all the way down to only up 20% and then up 80-90%. You got to hold through all of that. How horrible would that be on your mindset? And then all the way down onto 20% and then all the way back up to 250%. At that point, you're like, well, I already held it this long. I might as well just keep holding. And then where do you end up? You end up where we are now. Up 0%. So that is why I like this way of trading better than just buying and holding, because you can churn your account at a quicker rate and make more money with less risk. So you get in, boom, you make this 90%, you get out. You wait, boom, you make this 60%, you get out. Boom, you wait, and then you're up 300% in the same amount of time it took to make someone else 240% if they're extremely patient and they're not greedy and they're lucky as hell. This doesn't take luck. This just takes skill, watching the levels, sprinkling in your take profit orders, knowing where you're going to put your stops, and that's it. If you want an in-depth dive, like seriously, step by step, it goes over not just the technical analysis on how to trade and make money in the long term, it goes over the market too and psychology. So if you're into human psychology and why the markets move how they do, get the course. First link in the description. And there's weekly calls. I'm going to start up weekly calls as well. So if you have any questions, I'll have a call every week. We'll make it on Fridays. We'll have the calls on Fridays tomorrow. Okay? So if you get in today, you can ask calls tomorrow. Okay? And these calls will be like in-depth calls, kind of like this video, but personalized to your specific situation. My name's CryptoBeanist69. I hope you guys enjoyed this video, and I hope it brought you a ton of value, because these strategies are super money. It's a money printing machine, this market is. 1, 2, 3, 4. That means everything is aligning. Everything is aligning. Take that as a sign. Get started today. CryptoBeanist69. Go give me a call, shoot me a text, leave a comment, hit that like and subscribe button, and I'll see you guys in the next video. Peace.